Hey guys, Mike here. So sometimes I like to do videos that help keep things in perspective and might even make you feel better because you're not alone, right? If you're an individual stock picker, it is not easy, okay? We all have been there where we've either picked the wrong stock, we took profits on this stock, sold out, and then rolled them into another one only for that stock to just crumble or the market to turn on us or, whatever happened, right? And so sometimes what I like to do every once in a while, if it comes up, in a news feed, is bring you, these so-called experts, and that's what they are, that's what they do all day long, that have the most sophisticated software you can imagine, that have teams just dedicated to doing nothing but analyzing any which way you can these publicly traded companies and helping them pick, individual stocks for their investors or for their own money. And so I'm bringing you two examples of one of the biggest misses I've ever seen. I think it is the biggest miss that happened last week from these two people who are very successful. But one of them even committed a double whammy, taking profits out of one company that was actually crushed earnings, rolling them into another, right? And obviously just to lose pretty much all those profits or for them to be sitting there, but basically starting from scratch is what she's doing. And, they'll tell you to take emotions out of investing and trading and stuff. And that's easier said than done, right? I mean, when you're looking at your bank account or your trading account and it's dropped down by 20 to 30% in a matter of, a day or two, that's tough. And you'll even hear her, she's been doing this a long time, this first person. And, she's trying to say she's not emotional, but you can just hear it. She's pissed. She's pissed. And trying to convince herself, because these people are private like everybody else, that she did make a mistake and here's why and all that good stuff. So if you get anything out of it, hit the like, subscribe button for me, guys. I really appreciate it. And let's get into the first one and see what you think here.
Obviously, Google is the one we're watching so closely. You sold your shares in Alphabet recently. Are you regretting that now that we see the big pop?
Well, of course. Good morning, by the way. Of course, I regret it up 10%. Look, the quarter was really good. It was very strong. But what I did do, Becky, was I did sell Google, but I put it into Facebook.
Damn! Okay.
And because I do think that the risk reward at Facebook is much more attractive. At 20 times, you're going to grow about 20%. And I do think with Google's numbers, you can kind of think that hopefully that Facebook will have a good number tonight. It hurts, and thanks for having me on. It hurts, but I'm not getting emotional. That's the worst thing you can do at a time like this. I go back and I look at what facts are. And Google had a very good quarter, but I think it was up more because of the split, to be honest. It wasn't a perfect quarter. It was good. Don't get me wrong. But I have said that I made money in Google and I took a profit and I put it into Facebook and Meta. And obviously that was not the right timing. But I don't think this company is down and out. It's down, but I don't think it's out. Now, let's just talk about the quarter for half of a second, because there were some good things in the quarter that no one's really talking about. The fourth quarter, total revenue up 20% year over year, ad revenues up 21%. Yes, they had some slight misses in DAUs, daily active users, monthly active users, but they were almost in line. They were pretty darn close. The big surprise, by the way, they had a stronger ARPU as well. The disappointment was operating income, a 5% miss, a shock, right? That's obviously negative. And then, of course, the guide was also negative, the 3 to 11% total revenues for 1Q versus 15% expectations. Should the stock be down on that? Absolutely, it should be down. Should it be down 24%? No. It should be down about 8 to 10%, in my opinion. We know the reasons why. A lot of companies are going through these iOS changes and getting impacted. There is inflation. There is competition, especially TikTok. I think that Zuckerberg mentioned TikTok 6 times on the conference call yesterday. So they're going after TikTok, and they have an answer, and that's the important part. They're already seeing a mix shift to Reels, and they are going to focus on growing that and improving engagement. Oh, by the way, on the positive side on guidance, they did lower expenses, and CapEx is in line.
And I'm going to spare you the other 3.5 minutes she goes on with that call, talking about Facebook and all this other stuff, and kind of like, in a way, trying to say, yeah, it wasn't a miscalculation on her part, but let's be real. I mean, come on. It was. Now, did anybody expect it to drop 23 or 25% on one earnings call? Good God, no. But, with the next investor who you'll recognize from TV, you'll see there's a reason why it dropped so much. And, what is he doing before earnings? He's a buyer, and he's trying to tell people, yes, buy it, and here's why. But what's funny is you didn't hear anything about the metaverse on the first lady, right? I mean, the first investor is just telling you, all this other stuff about the numbers. But then, of course, this gentleman, Kevin O'Leary, you probably recognize him, called Mr. Wonderful. Really, the reason why he's a big Facebook proponent is the metaverse.
I am. I think the narrative is going to start to change on this quarter from the bread and butter old-time business of selling geo-locked advertising to what the metaverse is going to look like. And if you're an investor, you have to start thinking about an issue that is going to involve large advertisers. And here it is. The unregulated metaverse, the Wild West metaverse, which is also getting traction, is not going to be popular with big advertisers. Because if you go buy real estate and set up a liquor store or a porn site in the metaverse that's unregulated, that's a problem if you're a brand. What Zuckerberg's going to start talking about is a curated metaverse where he can guarantee you safety in terms of what brands you're associated with.
And I'm going to spare you the other 2 minutes where he goes on continually about the metaverse and Facebook and how he's a big buyer and all this stuff and it's undervalued. And then, of course, earnings hits.
I'm going to start with Kevin. You have been a Facebook bull for a very long time. Is this one of the great buying opportunities of your lifetime, or is this something else?
Well, in a nutshell, I would say it is a buying opportunity. And so the answer is yes. And here's the way to look at it. This company's been public almost 10 years. I look at it from the point of indexing for sovereign funds and pension plans. About 8 years ago, or even 7 years ago, it became a standard in indices. So not to defend the stock or what happened in the quarter, but when you get indexed, you end up being 3 to 6% of a mandate. And you see this all over the S&P. You find Facebook in ETFs, you find it in sovereign funds, you find it everywhere, because there's really nowhere else to get an aggregation of this many billion users in one equity. Now, here's the question. After all of this last night, and I must tell you, I was on a call with some investors in Europe and very late at night in the Middle East, because sovereign funds own a lot of Facebook, and they stayed up late for this. And we were all on a Zoom call, and our phones were on mute, but they vibrate. I knew Facebook missed its numbers when I heard everybody's phone. There must have been 21, 22 people on that Zoom were buzzing. And one of them actually went to the CNBC app, and Wilf, the British guy, started talking. All around the world, we were listening to this. And so we had a discussion about what happens next. For about 80% of them, they're going to average down. You're trading just under a 17 PE. The company's missed its earnings. This is the third time in basically a decade. Every time that occurred, it was a buying opportunity.
And I will say, I cut that off because it goes on for a lot longer than that. And he does finally get to the metaverse part of it. But as you can see, the perspective totally changed once the stock dropped 23 to 25%. All of a sudden, it's about the valuation now, not the metaverse so much. And, at least he was honest about, what he said about Zuckerberg, right? He totally just threw the stock under the bus, right? I mean, he's the reason with the forward guidance or everything he said on the call, why it just plummeted as hard as it did. And so, that's what happens. But of course, understand these people have millions invested in these companies. So of course, like he said, yeah, of course their dollar cost averaging down, right? Because as you can see by the chart, it's on this upward trend, and they've been buying dollar cost averaging in pretty much all the way up and all the way down. Even when it started going down, they were on TV talking about it. And you see all the dips, right? Dip buying, dip buying, dip buying. And then I could barely even notice the gap was so far down, and the selling bar there is so high, I almost didn't even notice. Like, where's the bars at? Way down there. I mean, that is a enormous gap. It's 23% gap down, to where at this point in time, you are actually getting the stock at like 2019 levels now. And so, of course, guys, it's like 2021, 2020 didn't even exist for Facebook, right? Netflix either. Because unless you took profits on the way up, you're basically starting over from 2 years ago. And so, just frustrating for them. It's frustrating for the first investor because she invests for other people. So that was their money that just got lost. Kevin O'Leary pretty much invests for himself. I don't think he handles anybody else's money. Maybe he does. But, of course they have to stay in it because they got so much in it, right? And they bought in so many times. They've dollar cost averaged in so many times. And so, but it's good to see stuff like this. I don't wish it on anybody, just to keep it in perspective. And so if it can happen to them, it can happen to anybody. I mean, that's the name of the game, especially in a market like this, right? I mean, whoever thought you see, FANG stocks dropping this much on earnings calls alone, right? I mean, that's it's nuts. Now on Facebook, it's more interesting because it's almost like they're changing their business model. So they changed their name and ticker symbol, and so here they are sitting here going into the Metaverse, and so that's going to take time, to build out, to do what they want to do, if they can make it successful. And so we'll see what happens. We'll see how long it's going to take for them to get back up to where they actually bought it at and stuff like that and start profiting. But, let me know in the comments what you think about it. Or did you buy before earnings, or say, nah, I'm good, I'm going to hold out, or you're hoarding cash or whatever. So anyway, hope you got something out of it. Hit the like, subscribe button if you did, guys, and I will see you tomorrow.